Two words, insurance basics. How are you guys doing today? My name is Apple, and today, as always, we are filling in the financial gap between schools and the real world. And today what we're talking about is the basics of insurance. Insurance for beginners, and just those little things about insurance, all that vocab that you need to know, all that stuff that they're going to expect you to know when you go in to your insurance agent's office to go out and purchase that insurance that you are going to need as an adult. So I figured this video will just give you a quick rundown of all the terms you're going to be expected to know, what they mean, and how you're going to be able to use them in a conversation with an insurance agent to make sure that you have all your bases covered and you know what you're actually going to be paying for that insurance policy that you're going to have throughout your entire life. So that's what this video is about, and without further ado, let's just hop right in. All right, so back to basics. All insurance is it is a form of risk sharing. So it is a form of transferring risk from many people to one entity that is going to cover the risk of all of these people. So let's just draw this up on the board a little bit, and you guys are going to be able to get a better idea of what I'm talking about. So we're going to have a lot of people. We're going to have 4 people. These orange boxes, that's the people. And then over here, we have got our entity that is taking the risk. So the risk is going from each box to this guy. Everybody is transferring their risk to this guy. All right, so let's put some names on these boxes so we can get some terms down. So the first term is policy holder. So that is these guys over here. These guys are the policy holders. We've got policy holder. That is these guys. These guys are all policy holders. These guys are all you and me who are paying for insurance every single month to make sure that our risk is transferred to a different entity. So say all of these guys are buying homeowners insurance, or they're all buying renters insurance or auto insurance. So they are transferring the risk associated with owning that car or owning that home to this other entity who in this case is the underwriter. So we've got an underwriter over here, and the underwriter is taking the risk. So risk is being transferred from the policyholders to the underwriter. So instead of each of these guys taking that risk when they drive their car that they're going to get in an accident or cause some damage, they are transferring that risk to an underwriter who says, don't worry, if you get in a crash, we will pay for it, but we're going to need something in return. So that is where your premium is going to kick in. So you've definitely heard the word premium before. It's a word that is talked about a ton when it comes to insurance, but a lot of people actually don't know what the word means. So premium is going to be your monthly payment that policyholders are going to make to the underwriter. So every single policyholder is going to make a monthly payment. So we'll just say it's $10. So you're paying $10 in auto insurance to this underwriter. And each of these guys is paying $10. And that is their premium. So $10 a month is their premium that they're paying on their insurance to their underwriter to share the risk and let the underwriter take care of any risk that may come up with their asset or with whatever they are insuring. So this is the premium. The premium is $10 in this case, and that is what transfers the risk from the policyholder to the underwriter. Now, in exchange for paying that premium and sort of insuring themselves, what they're getting out of that is they're reducing their financial uncertainty. And this is the big, big benefit of insurance. You're reducing that uncertainty that if you do get in a crash or if a tree does fall on your house, you are not on the line for that. And you know that because you've been paying these monthly payments, there is somebody who's going to step in and help you out and pay those big costs so that you can just remember every single month you've got these little costs that are going to add up, but when something big does happen, you're not going to be completely on the line for that. And that is the big, big benefit of insurance, that you can really plan for your life more effectively because you don't have to worry about these huge expenses coming up. You can just factor in your little premium every single month that you know you're going to have to pay, and you're not going to have to worry about saving up a bunch of money in case like a tree does fall on your house or something. So that is why insurance is very, very beneficial. It gives you that confidence that you're not going to have to worry about the big stuff, and it just allows you to share this risk among many different people into one single entity. So, like I said, each policyholder is going to be paying a premium. Additionally, they may have to pay a copay. So what a copay is say you have to go see the doctor. A lot of insurance companies are going to charge you a copay of, say, $20 just to see the doctor. They're going to charge you an additional $20 just every time you go to see the doctor before they even do anything. You're going to have to pay this $20 up front. That's just part of the insurance policy, and that is called a copay. Next is when something big does happen, what you do is you file a claim. So when you file an insurance claim, that is basically saying, okay, I am going to need to call on you guys to cover something that just happened to me because it falls under the scope of the insurance and it is something that I am insured for. So say that tree does fall on your house, you can call on your homeowner's insurance to come through and get you some reimbursement for that, or to just come in and cover that because that is something that you were insured for and that is what your monthly premium was going to pay for. But say that tree falling in your house ends up costing $20,000 of damages to your home. It costs $20,000 worth of damages. How much are you actually going to end up paying for that? Well, that really depends on your deductible. So deductible and premium are like the two key words that you're really going to want to take away from this video. And premium, as you'll remember, it's your monthly payments that you're paying every single month to the underwriter. And your deductible is the amount up to which you have to pay out of pocket before your insurance kicks in. So say you have that $20,000 worth of damage on your home and your deductible on your insurance is $5,000. So in this case, you are going to have to pay $5,000 before your insurance kicks in and covers the last $15,000. So this is something that not a lot of people take into consideration is their deductible, and you got to make sure you know your deductible when you're getting an insurance policy because it is going to have a huge effect on how much you do actually end up paying. And the premiums and the deductibles really go hand in hand, and they're kind of like inversely related. So if you get a plan with high premiums, so you're paying a higher amount every single month, you're going to have a lower deductible because underwriters know that you're going to be paying them a higher amount every single month, so they're not going to need to collect as much in a deductible when you do have to file a claim with them. But additionally, some underwriters are going to have maximums. So once you hit a certain cap, could be per year, could be per lifetime, they're actually not going to cover that thing anymore. So with health insurance, a lot of times, like organ transplants, your insurance company is only going to cover up to $200,000 of organ transplants before they cap off and they say anything beyond that is on you. We are not going to cover that anymore. So there are going to be some caps in your insurance as well that you got to make sure you're aware of. So if there is something that you know you're going to spend a lot of money on, if you know you're going to need like 8 kidneys in the next 4 years, you know you're going to want to look for a plan that does not have a low cap on the amount of money that you can put towards organ transplants. So that is a big thing as well. So the big three with insurance policies are you got to know your premium, you got to know your deductible, and you got to know any caps. Okay, so let's just write that out. 1, premium. Number 2 is your deductible. And remember, these guys are inversely related. And 3 is any caps on your insurance. So anything that your insurance says, okay, once you get to this number, we are done. We're not going to cover you anymore. So remember, premium, deductible, caps. Those are the big 3 that you're going to want to take away from this video. And I really hope that you have a better understanding of these topics after watching this video. So that was really it for the video, guys. I just wanted to give you guys a quick rundown of what insurance is, what insurance does, and the vocab that you're going to need to know when you are communicating with your insurance agent. So all of these things that I talked about, they apply to homeowners insurance, renters insurance, auto insurance, health insurance, all of these different types of insurances. This was just a quick rundown of the basics, the quick basics of insurance, and I really hope you guys got some value out of this. If you did, be sure to share this with a friend, leave a like, and drop a comment below with anything you learned from this video or any questions you still have about insurance. Anyways, I will see you guys tomorrow. Be sure to subscribe, and until next time.